ideally at some point maybe buying a home. So at some point we just thought that we want to live in a bigger place, either rent or buy, and we found out that with some savings that we had with us at the time, it would be actually making sense to buy rather than rent, because we ended up having, like, with our deal, we're basically paying similar to what we would be paying for the similar place if we would be renting.
Hold up.
This is really exciting for the next episode of the For My Next Mortgage, I Will. I have Anna Janvelian, who, of course, I had the pleasure of working with for her first mortgage. Anna, how are you? Thanks for joining us.
I'm very well. Thank you for inviting me.
You look a lot less nervous. You look a lot less nervous than when we were working on the mortgage. How you doing?
Yeah. Well, it's just because maybe it's like a Tuesday working day, so kind of a lot of things in my mind.
For sure, but nothing as daunting as the mortgage process, which you totally conquered with, of course, your significant other. So hey, maybe give people a quick introduction on a bit about your story, where you're from, what you do for work, and then what was the impetus for you to be like, I should stop paying someone else's mortgage and maybe buy my first home with my significant other?
Yeah, so me and my husband, we moved here about 5 years ago from Russia, and we work in IT industry, both of us, and we've been renting for all these years, and at some point we decided that we were in a tiny studio, because we sort of, one of the reasons we're in a studio is because we were saving money for like we didn't have an exact goal in front of us, but ideally at some point maybe buying a home. So at some point we just thought that we want to live in a bigger place, either rent or buy, and we found out that with some savings that we had with us at the time, it would be actually making sense to buy rather than rent, because we ended up having, like, with our deal, we're basically paying similar to what we would be paying for the similar place if we would be renting.
Wow.
So
okay.
That's what I said.
Yeah. So that was your
but that's not always the case, though. But it is a case with us. Fortunately, I guess.
So basically, people are watching. They're like, okay, at the point, what am I paying for rent, and what would I be paying for my mortgage at this rate or at this price? And you're saying that if the mortgage is less than rent, it's probably a sign to get more curious about, getting your own place. Was that kind of your aha moment?
If you do your calculation, and if the mortgage payment would be less than rent, you don't really need to think about that too much. I think it's obvious. Then it would be better. I would say that if which is more realistically, mortgage payments normally would be probably a little higher than rent. It's not necessarily, but like if you're looking at the similar places, then if you say in your case the mortgage payment would be not very not very high comparing to what you would be paying for rent, I think it's definitely something to consider. Because like if it's like even like maybe a couple $100 more or something like that, I don't know. I'm not very, we didn't do very much of we just looked at our case, so I don't know what would be with other people, but yeah, definitely when you're wanting to extend, it's something to consider, especially if you have some savings for like down payment, etc.
Sure, and that was huge, right? Like, if you didn't have enough down payment, then you would have to pay the mortgage default insurance. You would have bigger mortgage payments because you asked for more mortgage, right? Because the house is a certain price. You got your down payment plus the mortgage. The bigger the down payment is, less mortgage you take, and therefore the less payments, right? So that's maybe why the rent and the mortgage were similar because you had a big down payment, which is a huge thing to have good saving habits, right? Was that always something you've had, like good saving habits, or do you have a strategy on how you save? Or
I definitely was like, before I met my husband, I was not very good. I mean, I don't even want to say very good. I was terrible at savings, but
okay,
he sort of taught me, like not taught me, but I was looking at his way of life. And I think for a while now, we just sort of buying what's necessary, not
mm,
like if you really, basically, my general advice, I think, not real advice, but like if people ask me, I say that you just need to think, do you really need that thing? Like, do you need that purse, like your 10th purse, or your like 11th pair of jeans or whatever, you
sure.
know? And it might be sound funny, but it's little things that just sum up, and after a couple months of saving on a little things, you might even end up with a few, like $100 extra or something, even more, depending on how much you save. It doesn't mean that we don't do stuff. Like we still go skiing, we go like, well, hiking is not very expensive, but still,
Sure.
like we do some stuff with our friends.
Yeah.
But we just like think before we do purchase, I guess.
Cool. I love it.
Which doesn't mean that people don't think, but I definitely did not before at
Yeah.
some point in my life.
No,
Yeah.
absolutely, and a lot. I mean, a lot of people are like that. Canadians are very over leveraged, right? But it seems like you were influenced by someone, which is of course your husband, and you kind of saw their habits, and that sort of trained you. And then, I mean, did you know that? Did you know that down payment was as important as it is in Canada for a mortgage, or did you just happen to be a good saver and you're like, oh, thank God we saved. This is going to make our mortgage process.
No,
Did you know about the mortgage process at all when you were saving?
yeah, I mean, it's my parents had mortgage in Moscow, so
Yeah.
it's a sort of, it's not something new for me. I obviously knew that
No.
the the bigger the down payment, the better the rate and everything.
Sure.
Like it's better.
Hmm.
Which is unfortunate, because basically, like, the more money you have in the first place, the better your mortgage will be. But um,
Hmm.
on the other hand, is if I know correctly, then I think if your down payment is not very high, then you might get a better rate, I think. So,
Yeah, than a short mortgage.
which is better actually, because like, I guess our rate would be better if we would have a smaller down payment.
Yeah,
In
under
our case,
2%.
yeah.
However, you have to pay mortgage default insurance and you're just paying interest on a bigger principal, which in the long term you are paying. That's why it's much more than just rates, because you can have a lower rate. If you do the math, okay, what does this rate mean for my mortgage payments over time? You'll see you'll save a lot more off a higher rate, but a lower principal and no mortgage default insurance, rather than, a low rate, but like a huge principal, like mortgage kind of sum, plus paying mortgage default insurance.
Yeah, and that's true, because like, if you don't, or definitely if you don't want to pay too many interest, like a lot of interest, definitely you will pay a lot if your down payment is less, and you will be paying a lot throughout the years.
Mhm.
But it's also the question of your preference. Maybe you just don't want to pay a lot right away, and maybe you want to have some savings for some,
True.
maybe you have some other things that you need the money for.
Of course.
And if in this case you will be the most important, one of the most important things would be if you're comfortable with your monthly payment, or like a bi-weekly, whatever it is, right?
Budget.
Because you need to know that you will be comfortable with paying that amount every month.
Mhm.
Otherwise, like, yeah, that's why I'm saying it should, I don't think it should be much more than you would be expecting to pay for rent.
Yeah.
Like,
Yeah.
it should be, yeah.
Great point. Yeah, that's awesome. So you have another thought there?
Sorry?
Yeah, I think you're about to say something. I'm like, ooh, she's on to something. Were you going to say something there?
No, I didn't. I was just thinking, like, no, I was just sort of elaborating this same thought that
Mhm.
basically you want to stay in the same level of comfort of your life, I guess, same
Sure.
lifestyle. I mean, if your lifestyle is you're spending all your money on everything, you don't have any savings, you probably need to think of changing that.
Sure.
But if you do have some savings, and if you have some hobbies, like, I guess you probably don't want to say bye to those hobbies. Like, if you want to ski,
Yeah.
and you need to ski every year, it's probably something you still want to be doing. So it shouldn't be like a putting you in the jail or something, or like a huge debt, and you can't do anything except for paying for mortgage. Because some of my, like, I know people who has a lot of debt and they're not enjoying their life. At the end, you need to be able to live your life and not just paying debt every month.
Death and taxes, right? That's what yep. No, I hear you. Yeah, and it's a balance for sure. But obviously, you live more in your means. You found a way for it to, your lifestyle not to have to change too much based off the rent and the mortgage payments. You did the calculations there. And people say that they don't want to be house poor, right? That's when you have a house, but like you can't do anything. So it's a balance. That it's cool. And look, like you're a busy person, and I think people going into the mortgage process, especially who come in your shoes, they could be, not from Canada originally. Maybe they have a mortgage somewhere else, like like back home, where they've got certain things on their personal balance sheets that banks may ask about. Let's talk about some of the surprises, or I don't know, let's face it, the things that surprised you or annoyed you about the lending process with the lender. What were some things you just didn't expect that I don't know, hopefully you would approach differently, or if you were more primed on what was ahead of you throughout the mortgage process, you'd be a lot more calm. Like, let's talk about
that. Yeah, you named a lot of different parameters. Well, I'm not sure if it would start from the surprise. I'm not sure if there was something that surprised me. However, I do think that I wish I would knew more about non-bank lenders, because I think this is something I was introduced to when we started to, basically the point where I think we already got an offer. And we started to look for mortgages, or maybe a little before that, but basically after we found a place that we wanted to buy. And I wish I knew more about those, because I didn't know much. I did not have a lot of trust to that, and I was a little afraid of going with some non-bank lenders, especially because I didn't even know most of the names of those non-bank lenders.
Yeah.
And I was not very comfortable with getting into debt with the company that some of them even there's a lot of information of some of them on the internet, or at least you need to do some, it's not like you Google RBC or TD and you find them as the first, in a Google, you get very quick and there's tons of information. And however, as I know, a lot of people do get mortgages from them and just and happily live with those mortgages. And the good point of those is that they have lower rates. It might be not as convenient in terms of customer service, or although I don't know because I didn't work with them. It's just something I read that they're all online, and you can't just go to their branch if you like that kind of if you're used to that kind of customer service. It might be not as convenient for you, but it's something to consider if you want lower rates. But again, because I didn't know a lot about them, and we had to make a decision quickly, I just said, okay, so let's just go with the bank. And that's what we did.
And banks are fine too. There's different pros and cons between banks and these non-bank lenders or monoline lenders. But ultimately, I guess it seemed like you started learning a lot as you were already in the thick of house hunting, putting offers in, viewing properties. You're like, okay, way too much. Let's just go to the safe choice. But I guess what you're saying is, if you would have maybe, I don't know, started reading about it 6 months earlier, and maybe even talk to friends who are like, oh yeah, I'm with MCAP, or yeah, I'm with RMG, you would have been more open to it, and therefore it just would have felt, I guess it was rushed, because there's so much shit you have to, take in the most stressful time while you're working full time, mind you.
Yeah, yeah, that's a good point actually, because if you work for full time, so a lot of times I think a lot of people just put all the work to their mortgage brokers or realtor or whoever is working with them. But I think it's important for you to understand, you're the ones making decision. You're the ones signing all the documents, and eventually living with that for hopefully not the 30 years, but depending on how you pay that.
Right.
And it is important that you definitely understand everything that you're signing, all the conditions, and whether you are comfortable with those conditions. So you might understand them, but you might not know that there is maybe something better or some other options. So you definitely need to do some homework before even getting into the even before I think you start searching for the place.
Right. And I remember you asked a lot about that. It's like, okay, here's our rate, but wait a sec, what's this thing about breakage penalties, right? We talked about those. You would even and you want to pay your mortgage off faster, but some places don't let you pay that much of your mortgage. There's a limit to how much you can pay every year. So there's all these different mortgage features that I guess you were learning about as you were reading the commitment letter. You had to sign it in like 3 business days. So if you would have maybe known more about the other features beyond just the rate, maybe you would have come a bit more, I don't know, prepared or less stressed.
Yeah, I think maybe something that might help to go through that process is maybe have a lawyer before signing process, because
Sure.
normally a lawyer comes in when you actually have all the documentation. They're just preparing all the documents, all the transitions. They just do that. But you also obviously have an option either with this lawyer or another lawyer, just to have them to help you read through the documents, understand them better. It's not necessary, because like I don't think a lot of the things you probably can even Google some of the stuff, because like it's pretty normal and common, all the conditions there. But again, it also depends, like say like big banks, they have their own templates for the documents. They're not gonna, definitely I don't think they're gonna try to lie to you or something. Like, so I don't know, maybe if it's some smaller lender that you're not sure about, maybe in that case would be safer to have your own lawyer. But in a lot of cases it doesn't matter understanding, so you want to be able to read through that and understand all the conditions. A lot of the law terminology might be not super clear from the start, and actually I think our lawyer, they did send us some of the clarifications for the documents, so we did ask back him with some questions. So yeah, that could be helpful. Yeah, I think just being aware of what you're working with, and ask questions if you're not sure about what is it that you're signing, and about the the limit of the lump sums for each year. Yeah, definitely something to read before you sign. I think it's something that would vary from lender to lender. We do have a limit, but our limit is very high, so like it's not something that would be limiting us really. So yeah, so if you are looking into the putting some lump sum, you want to check that percentage of how much you can spend every year, because if it's going to be limiting your, like, what if you want to finish close your mortgage in 10 years, and then you want to be able to put those money every year, right? Yeah.
For sure, yeah, it's just fine print around, paying off your mortgage faster. These lenders want to hold on to your mortgage forever because they make more money off of you. So you have to definitely look into that. And then, yeah, I mean, we're just coming to the end here to wrap up, but I mean, yeah, let's maybe, let's complete the sentence. For my next mortgage, I will, or I won't.
I will do more readings before. I don't even know. My next mortgage, you mean like if I buy a new place, or if I...
Buy a new place, or when your mortgage comes up for renewal in 5 years. You can switch to another lender, or you can...
like the new one. Okay. Well, I will start looking at the lenders like in advance for sure, just to find the ones that I'm interested in, because the mortgage broker, they will send you the options. But I think as always in life, like I mean, especially I don't like to rely fully on the person.
Sure.
Not because I don't trust, but just because I want to have I like to have a full picture. And so for that, like I'm not paying a person for explaining me how everything works. I want to be able to understand all that myself.
Sure.
And then when I'm presented by options, I kind of have an idea, okay, what they are offering to me. And so I know what to choose. So
what questions to ask, or what questions to ask the broker, right? Because then you can ask intelligent questions that then help you actually have a collaboration versus, hey, explain this to me. It's like, well, you can just go on Google or read it. I mean, I'm always happy to say I love explaining terms, but like you only have so much time to talk to your broker. So the more educated you are on like the basics of it, you can read, you can ask them more intelligent questions or do scenario analysis and like really get deep, right? The more familiar you are, the more you know what questions
Yeah,
to ask, I think is the key.
I think that's a great point about the questions, because yeah, if you don't know anything about the thing, you will not know what questions to ask. You're just going to be presented with information and you can say, okay, sounds good,
Yeah.
makes sense, and you're going to sign it. But then when you're actually facing some conditions or problems, then you're going to think, oh, okay, I should have asked that, or I should have done that. So yeah, you need to know, like, it's hard to come up with them. That totally makes sense. It's just hard to come up with examples where I would have that. I think maybe one of the example would be not strictly to mortgage related, but where
Hmm.
when we signed the document, when we signed the purchase agreement,
Hmm.
when some of the conditions weren't precisely written there. So
Hmm.
like some of the conditions of the deposit, stuff like that. So like
Hmm.
what would happen if someone would not meet the conditions or would not proceed with the deal or something like that. You know, it's something that was not super clear in the document. So this, I think, could be applied to the commitment letter from the bank or lender, and in the mortgage loan agreement as well. So like you want to know that, and that's where maybe a lawyer could help. You want to know that all the conditions are written there, and if something, like if basically that you're not going to have any problems with your mortgage,
Hmm.
I guess. Yeah.
Yeah, so it's a lot of like upfront reading and being aware of, yeah, exactly. And especially the purchase agreement when you're actually putting an offer on the property. That's I think arguably a longer document than mortgage documents. It's also keeping your realtor accountable to understand what all these agreements mean and things like that, right? So it's a team effort. At the end of the day, like, you're the coach. Your mortgage broker is one of your star players. Your realtor is your star player. You've got your lawyers. It's like, if you play sports, like you're the coach, and they'll listen to you. They'll give you advice, but also if you don't know how to keep them accountable, and sometimes they may miss something, you may miss something. So yeah, I think it's important for you to be as prepared as possible. So I think you guys were really great at that, and definitely it's something that I think helped you guys out in the end, and it's definitely gonna help for the future financing endeavors.
Yeah. And it's definitely like something that I remembered, like it was a lot of stress for us, I think. I mean, at least for me, till the end, because one of the things that we were waiting for a while for the bank to basically, we got a commitment letter, but
Yes.
it was just like a few days before our closure date, when we actually received the mortgage loan agreement. I think it was maybe 4 days,
Yeah.
and 4 days seemed to be enough, but before that 4 days, before like 4 days to the closure date, when it was enough for the lawyer to prepare the documentation. But before that date, when we received the mortgage loan agreement, we could not get the date from the bank where they would say, okay, we're gonna send it to you like in a few days. So basically, we had no idea when they're gonna send us the document, if they will send us, because they kept asking us questions about our situation and
That's
whether we,
exhausting, huh?
but yeah, some like tons of follow-up questions, and that was quite stressful.
Yeah.
So I think maybe we weren't very lucky. I don't know if this is the case with all the people, but I've read what person could do about that is maybe try to have more than one lender to try, not in terms of working with them, but just at least have pre-approval from more than one lender,
Sure.
just so you know if something goes wrong with one, then you can like, and I think the important thing about that is in that case you have to be transparent, saying that I'm like searching for the lender. I'm not sure if I'm gonna get I'm not sure which one I to choose now. It's just because like people working on your case, like you don't want one lender to complete everything and another one at the same time working on your case, and then you just pick, it's like one or another ended up just being wasting their time.
Totally.
But at some point you might, yeah. So you just can try just sort of protect yourself, but without wasting other people's time.
Mm.
Yeah.
It's a fine line because yeah, you're right. Yeah, like so you're saying basically shop around with lenders. Hopefully your broker has different lenders. They can present a couple options to you. Maybe you do get pre-approved at both, and maybe that's just a verbal yes, or they give you a fancy little pre-approval letter. But anyways, that's I think is important. Just be really aware of the conditions and where you're going. But you're right. Like when you get commitment letters, especially if you get more than one, that's kind of frowned upon because they spend about $1,000 actually underwriting and giving you a commitment letter. But let's say you do it, right? At some point,
Okay.
yeah, at some point, like there's whatever, right? Like, I mean, end of the day, they budget for that. But the point is that like to save your time, the broker time, and even the lenders, you should know between your commitment letter date and the closure date pretty early where you're going, right? But it's good to even have like a commitment letter from one and then pre-approved from another. And then if this thing starts to fall apart, this one's ready to go. And if you've got a good broker, they'll have your file just right at their fingertips, and you'll have that plan B. But also, if you get through the conditions to get an official approval, because you get your commitment letter, right? The commitment letter is when you put in your deposit, you get a commitment letter that says, hey, you'll get the mortgage funds if you fulfill these conditions before your move-in date.
Right.
So if you can get those conditions just clarified as early as possible, and then they officially instruct the lawyer, that's what you're talking about as far as, like we didn't know we were going to get the official documents inside of the branch because the conditions weren't fulfilled. So the sooner you do that, the more certainty you have, and then the more you know whether you have to go with a plan B, right? And since you guys had a long closure date, you were like, your day of putting your deposit down to when you actually moved in was like 4 months, right? So I think we were comfortable for a while, and then after we're like, wait a sec, this isn't clear, and it was kind of a scramble. So I feel like the extra time might have made us all a bit comfortable, and then it became stressful for you. And that's how humans are, right? But like, maybe that's an extra thing to add in there too.
We became too comfortable because of that, I think, because it's including the bank, because I think everyone started to work on that like a month before.
Yeah.
And that's when they started to have all the follow-up questions, and then it became quite urgent for us to reply to them. Like for some of the documents, we had to go to the third-party organizations to get the documentation that they need.
Right. Exactly.
I don't know. Again, I'm not sure if it's just us. I don't think, like, I didn't talk to many of my friends, but I don't think it's the case with all the people. So I think maybe
more than you think.
Us.
More than you think. Everyone thinks they're targeted. Honestly, they're just the bank or the lenders just being really conservative, but they'll be super picky. And some of them are better than others at communicating, and some of them are a bit more relaxed than others. But if you're the big bank, they're going to be especially strict because they have the government breathing down their neck, right? But point being is that, they're strict, and it's going to be a stressful week or, of course, period of months before you move in. Yeah. So the more on it you are, the better. And sometimes you have to kind of get your team going to make sure it's all going at the pace that you want it to, right? But hey, you guys pulled it off. Lots of learnings, obviously. It was a fun file to work on, and yeah, we got it done. And again, it was really awesome to work with you on our tour and understand, get your ideas from the process and feedback. And yeah, do you have any? So I guess as far as for the next mortgage, I will just to summarize. It seems like you're gonna maybe be faster on conditions, maybe get a couple lender options beforehand, study it early, and then it seems like you're going to be just a little bit more kind of proactive before that critical period. And the same can be said for someone who's maybe a year away from getting their first mortgage. Well, if you don't have your minimum down payment, your minimum credit score, certain conditions or questions that might be asked, then you might be scrambling when you put an offer down, and nobody wants to scramble. And it's so avoidable if you just ask some questions early and just get curious about, the mortgage rules. I know it's the most exciting thing, but once you're doing it, it's actually pretty interesting, the stuff you can learn. So, any other last comments or thoughts you want to leave the audience with so they can have a more pain-free mortgage experience?
I think you summarized it pretty well. And I would just point out that, definitely important to ask questions when you have them. I tend sometimes to I sometimes don't want to bug people too much, and I'm just like saying, okay, I guess it makes sense. I will follow up with, I will just Google that later. But sure. Sometimes I start research on the internet and I have more questions. So sometimes it's easier to just ask questions. The worst that can happen, they're just not going to answer you and ask they're probably just going to answer that. It's not a big deal.
They should.
So definitely just ask a question if you have them.
Ask questions, be curious. Well, there you have it, folks. Thanks for tuning in. That's Anna, and I'm speaking on behalf of course, her husband Artur. Proud new homeowners who are slowly but surely decorating their awesome new home. Maybe on a follow-up episode, we'll hear about what that looks like. And I know it's a whole other project in itself. And Anna, thanks again for your time. Really appreciate it. I'm sure the people watching this are probably writing notes furiously and hopefully better prepared for their next mortgage experience. So thanks again.
Thank you very much.
Take care. Bye for now.
Bye.